Here's the thing nobody tells you about money in this country. Your paycheck and your financial life are two completely different conversations. You can be earning more than almost anyone you know and still feel broke by Thursday. You can be on a wage that sounds modest and still be quietly building real wealth. The number on your payslip and the number in your bank account 5 years from now are barely related, and today I want to show you exactly why. We're going to climb the ladder together, rung by rung, from the minimum wage right up to the top 1%, using real 2026 numbers, real tax, real take-home, real cost of living, no guessing, no outdated stats from 3 budgets ago, no vague "it depends" answers, just the actual figures, bracket by bracket. Stick around because the bracket where most people think they've made it is actually where the wheels fall off for a lot of Aussies. And I promise that one's going to surprise you. 1. The minimum wage right now. The national minimum wage sits at $26.44 an hour. That's just over $1,000 a week before tax, or about $52,000 a year full-time. After tax and the Medicare levy, you're taking home somewhere around $865 a week. Call it $1,730 a fortnight. Now picture that against a capital city rent. In Sydney, a one-bedroom unit is realistically $600 to $750 a week if you're on your own, which is impossible on this wage, so you're share housing, full stop, probably with 2 or 3 other people, just to make the numbers work. Add groceries, add the phone bill, add the Opal card, add whatever your car or public transport is costing you, and there's genuinely nothing left over. Nothing. Not if you're careful, not if you skip the coffees, nothing. This isn't a discipline problem, and I want to be really clear about that. Compound interest doesn't help you if there's no principle to compound. You can't budget your way out of a structural gap between income and cost of living. Millions of Australians are sitting right here, working full weeks, doing everything right, and still going backwards the second an unexpected expense turns up. A car repair, a dental bill, a rent increase, one bad week, and the whole thing tips over. 2. What typical actually means now. Let's jump to what actually counts as typical. Forget what you see on LinkedIn, where everyone's apparently ahead of growth on 6 figures. When you include everyone, full-time, part-time, casual, the whole workforce, the typical Australian earns somewhere around $75,000 a year. After tax, that's roughly $60,500 or about $2,325 a fortnight. This is where life stops being a straight-up survival exercise. You might still have a housemate. You're probably still driving something with a few years, or a lot of years, on the clock. But there's breathing room now, maybe $150 to $200 a week, that isn't already spoken for the moment it lands. And this is the bracket where the gap between getting by and getting ahead actually gets decided quietly, without anyone announcing it. Chuck even $80 a week into a low-cost index fund from here and left alone for 15 years. That's not pocket money anymore. That's a deposit or a serious head start on retirement. The people who break out of this bracket aren't always the ones chasing the next pay rise, the next job title, the next negotiation. More often, they're the ones who quietly automate the gap between what comes in and what goes out, so the saving happens whether they think about it or not. 3. 6 figures. For a long time, this was the number, the one that meant you'd cracked it in Australia, the one your parents' generation used as shorthand for made it. Here's the reality check for 2026. $100,000 is actually the typical full-time salary now, not some elite tier. It's the middle of the pack, not the top of it. After tax, you're pocketing roughly $77,500, which lands around $2,980 a fortnight. That's solid money, no question. But run it against Sydney or Melbourne rent. Houses pushing $700 to $800 a week in Sydney, units not far behind, and a 6-figure salary barely dents a deposit, let alone buys freedom. The median house price across Australia's combined capital cities is sitting north of $1 million, with Sydney alone well past $1.2 million. A salary that used to buy a home in a few years of disciplined saving now barely buys a foothold. And that's before you factor in stamp duty, lender's mortgage insurance, and everything else stacked on top. The $100,000 dream isn't dead. It's just been quietly downgraded from wealth building to comfortable survival in the big cities. And that shift happened faster than most people clocked. If you're on six figures and still feel like you're treading water, that's not you doing something wrong. That's the maths of 2026. 4. The top of the 30-cent bracket push up to $135,000, and you've hit the top of the 30-cent tax bracket, the point where every extra dollar starts getting taxed at 37 cents instead of 30. After tax and Medicare, you're taking home around $101,000, or roughly $3,900 a fortnight. Life here genuinely opens up. You can rent well, save consistently, still have a social life, still take a proper holiday once a year without it wrecking your budget. But this is also exactly where lifestyle creep loves to strike. A bigger car, a nicer apartment, dinners out 4 nights a week instead of 1. And suddenly, a salary that should be building wealth is just funding a slightly nicer version of paycheck to paycheck, with better restaurants involved. The traps at $135,000 aren't about income. Nobody at this level is short on money in any absolute sense. They're about what you let your income quietly turn into when nobody's watching, because the spending expands exactly as fast as you let it. Quick one. Drop a comment below telling me which bracket you're sitting in right now and whether the take-home number surprised you. I read every single one of these, and I'm genuinely curious how far off people's expectations are from the real figures. 5. The top tax bracket. Here's a stat that surprises almost everyone. The top tax bracket kicks in at $190,000, and only around 6 in every 100 taxpayers in this country earn that much. It's rarer than people assume. If that's you, your take-home lands around $134,800 a year, or about $5,180 a fortnight. Your effective tax rate is creeping toward 30 cents in every dollar once you average it all out. You feel the tax at this level, properly feel it every pay slip. But the flexibility is real, and it compounds fast if you use it. Maxing out super contributions, building an investment property or a share portfolio on the side, choosing where and how you work instead of just taking whatever's offered. These all become genuinely available options, not fantasies. The catch? Plenty of people on $190,000 still live paycheck to paycheck because a big mortgage, private school fees, and 2 car loans can swallow almost any income you throw at them. At this level, the income was never the problem. It's more than enough. The commitments are what quietly eat it alive. 6. The top of the ladder. And now the top of the ladder, the $350,000 and beyond. This is genuinely rare air. We're talking a sliver of Australian taxpayers, a fraction of a fraction. After tax, you're left with roughly $220,000, which means you're handing over close to $130,000 a year to the tax office, more than most Australians earn in total, gone in tax alone. Every extra dollar above $190,000, the government is taking 47 cents of it once you count the Medicare levy. At this level, money stops being the constraint, time is. The real risk isn't running out of income, it's assuming the income lasts forever, because it rarely does. Careers shift, industries get disrupted overnight, health can turn on a dime, and the role that pays $350,000 today might not exist in the same form in 10 years. The high earners who actually build lasting wealth aren't the ones with the biggest paycheck. They're the ones converting today's big income into assets, property, shares, a business. They keep paying out long after the salary does or stops. So here's the real lesson from climbing this whole ladder. Your pay bracket is not your financial destiny. Someone on $75,000 who banks half of it will outbuild someone on $250,000 who spends every last dollar every single time, given enough years. It was never really about the number on your pay slip. It's about the gap between what comes in and what goes out, and what you do with that gap, year after year, quietly, without fanfare. Wherever you're sitting on this ladder right now, whether you're at the bottom rung fighting for breathing room or up near the top wondering where it all went, that gap is the one thing fully in your control. Widen it, protect it, automate it if you have to, and let time do the rest. If this helped you figure out exactly where you stand and maybe rethink where you want to be, smash that subscribe button and turn on notifications, because we break down real Aussie money numbers like this every single week. Thanks for watching, legends, and I'll catch you in the next one.